Hello, this is Ronnie. I'm back here with a clip focusing on the precious metals. This time I decided to share with you a longer clip where you're going to see the precious metals priced in not just the US dollar but also in yen and the British pound. I hope that the analysis will help you in the coming week in your trading, in your investment decisions. I want to mention also that I'm opening my offer for my services at 50% off the first year, and if you're interested, please stay on. I'll be providing further details after the clip ends. Other than that, I wish you have a great trading week and see you next week. Bye now. This is silver priced in US dollars, and it's showing you here the daily scale, and silver broke down recently, and I'm sure quite a few of you are wondering whether the bull is still alive or what's going on. I'll do my best to answer these questions as I'm looking through the precious metals priced in various currencies. And the long-term chart here of silver, if you remember, you were questioning the possibility of a 1, 2, 3, and that potentially could be a fourth wave. I'm raising these prospects again here because if it breaks through this mauve line that you see here, it could indeed be that it's going down to give us the E leg, where we're going to count this as an A, B, C, D, E. That would imply that silver is not going to break severely the bottom registered here. Yes, it's going to come, maybe not even reach that level, maybe just reach the black line. Yes, the support line rising here, and then it would take off on its epic fifth wave. Okay, this is one possibility long term. I don't see in the current structure a case for arguing that silver is going there. Okay, so sort of like breaking 10, 7.5 or things like that. I don't see it at this point. It's possible I'm missing something, but the structure doesn't look to me like it's yielding this kind of reading. Okay, I'm going now to focus on the recent price action, where we're going to see that a few options that we discussed recently are going to be eliminated as a result of further information that Mr. Market provided us with here. That is the daily with a recent price action. So as you know, we have been working with this being a 1, 2, 3, and that's potentially a fourth wave. This idea is not completely dead. It's perfectly possible that it's going to play out in this way. But as I told you, as soon as it runs through the mauve line, that should be taken as an ABC or another 1, 2, 1, 2 structure. I don't think it's going to be a 1, 2, 1, 2, because when you have a 1, 2, 1, 2 structure, the second wave doesn't really reach very far. Normally it's a sign of an extremely impatient market. Yeah, you don't get this kind of thing and saying this is a 1, 2, 1, 2. It just doesn't work like that. What normally happens if you are in a 1, 2, 1, 2 situation, that's you 1, 2, so the other 2 is going to be something like that. It's a market that is on a hurry. It's not going to spend long time here, and that's why I don't think it will fit a 1, 2, 1, 2 here. Therefore, we are going to be left with an ABC. Okay, and that would imply that what we have here, definitely corrective the way I see it, definitely 100%. This is corrective. This could perfectly work as the E leg. Okay, so that will be the final, if you like, the final leg inside that huge triangle. There is zero doubt in my mind that what I see here is corrective. Okay, absolutely 100%. This is corrective, which means that longer term this is bullish. Yes, because this is basically presenting counter trend move, and given that it's going down, of course the main move is likely to show up on the other side, which means it's going to go higher. Okay, so let's now examine the details step by step here. That is the 60-minute scale. 60-minute scale with the various options that I mapped out for you yesterday. One of them, at least one, is completely knocked off by now, given the continuation of the price action that we have seen on Friday. So we had, as you remember, we had this as a possible fourth wave horizontal A, B, C, D, E. Look, it sank under this level. It looks like it wants to continue lower. I think it is unlikely playing out as an A, B, C, D, E. I think it is unlikely, not in the shape that I've shown you up to now. There is something else going on. The other option where I said that it would bounce, or rather it should really bounce right from here and give us a tiny ABC that could mark the B inside the structure of an A, B, and then send it down for that C. Also this one, I think we should take it off. This is out. Why? Because it simply continued down. You see, it continued down, so that is out, and it seems to me that that is out as well. Okay, I think that's the way you go about it. You just eliminate the options that simply Mr. Market looked like he didn't follow them. Yes, we didn't get the elements to continue to support those options, so we eliminate them. So what we are left with is essentially this. We have gone down in what is an ABC, which could be taken as an A, complex ABCX, ABC, or an ABC in this manner, which should be taken as a B. And I take this as a 1-2. An ABC here doesn't fit. No, I don't think it fits. I could be wrong. I don't think it fits anymore. I think it looks to me more likely that this is a 1-2. And going down, I have a 1, 2, 3, 4, 5. That's a 1, 2. That's a tiny 1, 2. And it could be that I have the 3 done. Okay, so there could be further extension for this C going down. I do see silver under pressure, potentially going a bit lower. Yeah, that's perfectly likely in the circumstances here. I repeat, that's my 1, 2. There are two ways of taking it essentially. That's a 1, 2, 3, 4, 5, which means you are at the end of the third wave in red, and it's going to go sideways. So you're going to get a slight bounce towards 1710 or so, and then going sideways and then deeping one more time to the extent of registering something like, let's see, this is 1830, that's 4070, let's say 50 cents roughly from here. So that's going to go to about 1650. Okay, 1650. 1650 around here. Okay, somewhere there is support here, 1640, 1650, exactly as I'm showing you here. Now if we are going to into a more extended decline, that's going to be a 1, 2, and that's going to be a tiny 1. That's 2, which means that this is going to add somewhere here. You're going to end up having something like that, and you see will presumably end here. I think the C unlikely to have ended here. Okay, in fact I should reverse the rules because this is more likely to play out. So this is my reading currently. Either we have very short term sideways price action and then another deep, and then again sideways price action and then another deep, which will fulfill the case of a long C here. Or we in fact have witnessed the end of the third wave right here, and then just a slight dip and come back. Now I think in case of silver, regaining the zone of 17.6, 17.7 would firmly put it on the side of the bulls, and will stabilize the chart here. Okay, I said enough concerning silver priced in US dollars. Let's have a look at gold priced in US dollars. Now I want to tackle the most bearish reading possible, the most bearish, which I don't think is likely, but you never know, and we want to be prepared for any eventuality. The most bearish reading is fairly straightforward. You had this as an A, that's your A, that's your B with an A, B, C, D, E. And some of you have been following my videos for several months. You know that this was a reading that I have worked with for quite some time. And I said that's an A, that's a B, that's a C. So you end up with a big A, with a big B that terminated here, and you're going down for a washout C. Okay, this is a long-term scale, that's the weekly. That implies that gold is going to crash under 10, under 1,000 essentially, going down big. Okay, I don't think it's very likely at this point. There are several reasons why I don't think it's very likely. First of all, we don't have confirmation, just sort of to reassure you at this point, there is no confirmation that this is really the best option we should work with. And let's examine now the details here. So far, we worked with this as a likely scenario 1, 2, 3, 4. Is it dead? No, no, not necessarily. No, it has to sink under 1,360, 1,380 for me to give up on the 1, 2, 3, 4. Technically speaking, it has to break under 1,345. But by the time it breaks that low, yeah, 1,360 is probably a dead fish. It's not going to bounce back like that, delivering a fifth leg. So something else is going on. Okay, let's examine the details. Now let's dive to the hourly scale and have a look. This is the chart with all the arrows and everything I had last time I covered it, and I do think there is further decline coming. Yes, there is further decline coming. I think that could be taken as an A, B, and what we are doing now, we are completing a C. Okay, completing a C. I don't think it ended here. It might end somewhere here, and that could present us with the end. With the end of the C in red. Essentially, it is the same. It is the same structure that we applied, very similar to the structure we applied in the case of silver. Okay, there is a reading here that builds on this. Do you see? That being an A, and that being an A, B, C, D, E, that will be your B. So you have an A, you have a B, and that's a big C down, which means that that is a 1, 2. That could morph into a 3, 4, 5, terminating your C. So going back to 1,440, 1,420, definitely finding support above 1,400. That looks to me like a must if the entire structure is going to still, in my opinion, favor strongly the bulls. Yes, we could work with this channel. Okay, we're getting down to this vicinity of the supported registered here, 1,420, 1,400. Is it possible that we are still looking at a fourth wave that is going to go sideways? Yes. Yes, if you ask me, yes, why not? That could be an ABCA, ABCB, ABCC, yeah, where it's going to end. I think it's going to end somewhere here. And then you're going to have UD. It's essentially the flag concept. Yes, like that. And you'll have all the elements seen, fourth wave down, fifth wave unfolding. So I want to go back to the bigger picture here and address really the issue of at what point in time it is right to begin to forget about the bull in the precious metals, at least for several months. This is the daily. You see clearly huge inverse head and shoulders with a neckline busted here and very positive price action here. Now it's coming back. By the way, the fact that it's coming back and it might come back to retest this zone, this is a normal price action in terms of technical, yes, technical movement. It's a normal thing for a market to go back and recheck the breakout point. Okay, but what would absolutely kill the whole thing here, if it sinks under 1,360, it goes back under the breakout point and it just sits there. At that point, I would begin to suspect that it's heading under 1,000. Okay, and my very bearish scenario will kick into place with this being an A. That's an A, B, C, D, E as I mentioned, and that will be the C. So you have an A, you have a B, you have a C, and then that will be the huge C that will take it a lot lower. Right now, as you can see, we're very far from this, and I wouldn't rush to conclude that the precious metals are dead. Yes, that's it. The whole rally is over and we're heading for a crash. No, I wouldn't rush to conclude that. This is the chart of gold price in Japanese yen, and this chart looks like it's just doing what it's supposed to be doing to deliver the fourth wave elements that we are looking for. We got our A, we got our B. I told you on several occasions I welcome a decline that will clarify the wave count. That's exactly what we got. It's precisely what we got. So if I just look at this chart, I say life is business as usual in terms of wave counts. It's absolutely business as usual. That's 1, 2, that's 3, we're in a fourth wave. No fireworks, no worries, no problems at this point. It is just doing what it's supposed to be doing, and we have to do our job in terms of mapping out the various elements, but everything seems to be, for now, falling into place. That's the 60-minute scale. We have this as an A with a complex pattern here, and we have this as an A, B, okay, with an ABCDE triangle stuck here in the middle, and we have the 5 legs we took at a C as a C. Perfect. A, B, C. That's our B. Absolutely perfect. And then I think right now we should take this as an A. That's a B triangle. You can see, and that's the smash C. When we were here, I told you very clearly that this pattern doesn't look complete, and it looks like it needs completion by going down to check the base. That's exactly what Mr. Market did for us. So I think in a sense we should be happy. We should be happy that we are getting the elements that we need, and it doesn't look complete now. I think it is likely to bounce back or march in place a bit, and then another check on the bottom side here, and that will deliver the complete C. And that is the moment of truth in case of this pattern. We want to see it bouncing back strongly above this level, and that will put everything on track for us. Everything on track. I see a jump back above this level beginning next week, let's say early next week, because I think the stock market is going to go for a correction that could set up the stage for a comeback in the precious metals. If that happens, we sit on top of this overhead resistance, everything is fine. Absolutely everything is fine, and the precious metals will find their way to high ground over time. This is the weekly of the chart of, that's gold, yeah, priced in yen. And just to remind you, it's a reminder that we are still at a fairly high level from the breakout point, and this chart is doing well. I mean, the structure here is just okay. You can see the breakout point is right here, and it's looking good. It's looking good. That's a 1, 2, 3, 4. I don't see any reason to panic. This is normal price action consolidating in view of going higher. This is an interesting chart. This is the chart of silver priced in British pounds. Silver priced in British pounds has failed really to give us a clear breakout above this level, but it did manage to pop its head above this level, which means that it is strengthening the likelihood that this is a fourth wave ending here with a triangle. Okay, and this should be taken as wave 1. I'm going to go to the daily, and you will see, so our assumption is that the fourth wave ended here, and this huge jump should be taken as 1. And what we are doing now is 100%, the way I see it, is 100% corrective. Okay, that does not mean it can't continue to fall. If it does continue to fall, that's presumably part of the huge triangle that I thought ended here. But right now, as long as it doesn't come back towards 11.5, 11.25, around here, I think it's fine to be taking this as a corrective price action to the impulse wave here. Okay, that's an ABCXAB, and that is presumably our C. Do you see why I insist on taking the price action currently in the precious metals as corrective? This is 100% corrective, which is here. Also, when you look at what we saw in the chart of gold price in yen, it's 100% corrective. This is an ABCX, ABC, no problem. I really don't see any issue here. There could be a slight varied reading in this sense. Look, that's UA, that's UB, that's UC. So that's an A, B, C, D, E. You see, A, B, C, D, E. You start counting from here, and that gives you an elongated C. So you have an A, B, C. Alternatively, as I'm showing you here, A, B, C, X, A, B, and that's going down with a C. So there is further decline. We're not talking about a crash, but further decline potentially like that. And then silver priced in British pound coming back above 14. Right here, everything is on track. Everything is fine. It's going to continue higher. This is gold price in British pounds. Gold price in British pounds, weekly scale. We assume left behind a spectacular fourth wave that ended here or here. Okay, if it ended here, the stretch here should be taken as wave 1, and what we are doing now is corrective second wave. Okay, and here we got a clear run above the previous peak, okay, which tells you that most likely your fourth wave is behind you, which is very, very interesting. Okay, I think you agree with me. This is very interesting, and I'm going to jump to the daily. And again, this is 100% corrective what I see here. I think there is a fair case of taking it as corrective price action, whether you treat it as a 1, 2, 3 and that's part of a fourth wave, or whether you treat it as 1 and that's 2. Okay, I'm going to jump to the, let's say, 2-hour scale. So here's what I see, and this is really interesting chart. Take a look. This is an A, B, C, A, B, C, X, A, B, C, D, E, B. That's another C. So I repeat, A, B, C, X, A, B, C. It's not finished. Further decline looks like it's on the horizon. So let's go to the 30-minute scale and look at the details. Just look what a perfect triangle we got here. A, B, C, D, E. 1, 2, 1, 2, 3, 4, 3. Or the 3 is not finished. In short, you can see that this pattern is not complete. Yes, imagine to yourself, you got a nice triangle here. Yes, and this is your C. And I'll go to the 15-minute scale. Why not? Let's have a look from close what's going on. This is 1, this is 2, this is 1, 2, 3, 4. All that, you see, the 1, 2, 3, this is a triangle, but not on this scale. So it means, essentially, in my opinion, another 2 or 3 sessions before this is done. Yeah, imagine to yourself something like that. This is a tiny 1, 2, that's 3, so that's an A, B, C, D, E, like that, and then a drop, and then another triangle. Do you see? And another drop. So you end up with 1, 2, 3, 4, 5, and that's it. And it could come back. So for those who are looking for help to see where potentially we could start looking up, I would suggest you examine this chart. If you have access to the pound in British pounds, that could be quite helpful. Yeah, whether we terminated a fourth wave or a second wave, the pound regaining, gold priced in British pound, regaining this level, which comes just under 1,200, will be superb news for the bulls. Okay, could be ready to take a lot higher, to take off. Hello, hope you enjoyed the clip. I'm back here with some details about my servers, currently at 50% off for first time users. You need to go on my website. The homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week. And at the end of that, if you're happy, you do nothing, you go on to the plan of half price, essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit you know, where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here, it takes you to the page where it explains to you, you should read that, it explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year, but you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one, but the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very, very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I am based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.